I have right on my phone, I have a widget right here that
Make a
is
wish.
it's 1111. Yeah. It's the 5-year US Treasury widget here. So every time I look at my phone, I'm looking at what the 5-year US Treasury yield is. And the reason for that is because a lot of our loans are based on the 5-year US Treasury yield because we borrow 5-year loans. Often we also borrow 7-year loans. So essentially 5-year, 7-year, and 10-year bonds are important bonds to look over because they are the index rate when you borrow for commercial real estate on a long-term fixed rate basis. So for us, if the 5-year US Treasury yield, for example, goes up, that's going to make our interest rate that we're borrowing that 5-year loan at go up in lockstep. So obviously we want lower rates, but we don't just want lower rates. The true thing that we want is we want a spread between our cap rate, which is the income that the property generates, versus our interest rate. So in a perfect world, we would buy at a 6 cap and we would finance at a 4% interest rate. And that would be a 200 basis point positive spread, and we'd be printing cash and life would be good, right? So that's what we want as real estate investors. So we, generally speaking, want treasuries to be lower. The thing is, though, like I said, there's no free lunch. If treasuries come down, often people will bid prices higher, which pushes cap rates lower, and it'll keep the spread roughly intact. So there's more at play than just, hey, we want lower interest rates so we can make more money. It's not that simple, right? Because we're in a dynamic pricing world. So the biggest thing that we need to look out for as Lone Star Capital is treasury volatility. That's what gets us in big trouble, and that's what we've spent a lot of time on this podcast talking about. Because, and you've hear kind of old school investors who have been around for a long time. They are like, yeah, I've made money when a Democrat has been president. I've made money when a Republican has been president. I've made money when interest rates were 10. I've made money when interest rates were 0. It doesn't really matter, right?
We get it. You're rich.
Yeah. And that's true, because the truth of it is, yes, you can make money in real estate when interest rates are 10%, but you're going to need to be buying at cap rates of 12.